Saturday morning to you, and welcome to On the Mark alongside Mark Pappa. I'm Gary Byron. Mark is the president and CEO of Financial Resources Group. They're out of Glastonbury, Connecticut. Boy, what a busy week they've been having, I'm sure. You can find them online at www.frplan, F as in Frank, frplan.com. And the phone number that I would love for you to call, if not right now, then maybe at the end of the show, or certainly sometime today, this weekend, or during the week. The bottom line is that you do call that number, and that is 860-657-8380. Let me give you that one more time here, 860-657-8380. By the way, if you miss any of those points of contact, no worries. I'll repeat them at least two more times before the show is over. Good morning, Mark. Great to see you.
Good morning, Gary. How are you?
I'll tell you, I think I'm doing a little better than you are this morning. You look a little frazzled.
Yeah,
but,
it's just been a busy time.
It
with
is.
The tax stuff. It's a lot of work, a lot of detail. Actually, I have a much bigger business than I even anticipated. A lot of new clients this year coming through the door. Tax advice, the tax advisory side. A lot of people who we can assist and help lower that tax bill. So if they came to us this year, it's already too late. But what we can do is prepare them for next year. And then I also have a lot of people that want to do Roth conversions. And I know I did that strategy I was talking about.
You want to offer that again?
Yeah, absolutely. I mean, I'm going to be doing a lot of that's from Cash Flow Tax Advisors, who's a group of that Ready Pod. So that's the tiny home strategy. So we're going to be working on strategies like that to help people offset, if not eliminate, most of the taxes on their Roth conversion. So, I'm going to be transitioning from tax preparer, which I've been doing for 20 years.
Wow.
And, you get to the point in your career, Gary, where you've done everything, you've seen everything, you've done enough, you have nothing else to prove. And so I'm going to be handing that business to some of our CPAs that we work with. Through Zhao CPA, Peter, and has some very talented staff, and they're going to be doing the day-to-day stuff. I'm going to be focused more on financial resources clients. So if you're a client of financial resources, I will still do your tax return because we want to be able to see the detail and we want to be able to consolidate and make sure you're not overpaying in taxes. And we have several examples of that of clients with very sizable accounts that are not paying any unnecessary capital gains. They're very tax efficient. We're not seeing lots of trading in their accounts like you do at the big firms. And one thing I will say, and I will take a stab at every one of those big firms, they do tons and tons of trading. And, it really is, it's a disappointing thing. And people just sort of accept it, but you don't need to be a victim. You don't need to accept it. And bring in your tax forms, bring in your statements, and we'll show you how to fix that and put that money back in your family's pocket.
Nice.
And not into the trading desk's pocket or the government's pocket.
Oh, that's great news.
Yeah. And I have an exciting show today. I couldn't tell you how excited I am.
I know. When you told me what it was when you came into the studio, I was excited about it myself.
Yeah.
Let's. It's your show. You want to tell everybody?
Yeah. So Gary, I was at the gym last week, and on Sundays I go to kind of do a cool down and I stretch, like really, really stretch, because I've been working out all week at my gym F45, which is high intensity, cardio and strength. And I always bring my phone, and the first thing I do is read Barron's. Barron's is like the Bible, as far as I'm concerned, of financial publications. It's one of the best.
Better than Wall Street Journal.
Well, it's owned by the Wall Street Journal, so it's one and the same, but it's the weekend, a very detailed weekend version. Excellent story. On the cover is Musk in a robot uniform. SpaceX is going public.
Oh, yes.
Why a Tesla merger could be Musk's real endgame. And the minute I saw this, I said, and this was a long read, so I was pretty loose by the time I was done reading this one. I'll tell you, this is perfect for the radio show because people need to know about this. And I also want to throw a little teaser in there that we actually have backdoor access into the SpaceX IPO. So
wait a minute.
We're happy about that.
So first of all, this is real. This is not a rumor anymore.
No, this is definitely not a rumor anymore. They've obviously, it was on April 1st, they filed what's called an S1 with the SEC. It's a confidential S1, and they're a targeted public listing in June or July of 2026. So the full prospectus is expected to be out in late April or early May, followed by a roadshow. We're potentially weeks away from what I would say is probably going to be one of the biggest IPOs in history, aside from Saudi Aramco. But we're going to get into those details. But it's a super exciting opportunity. And last summer, Gary, we found this fund. It was an email that I got. And there's a lot of people making claims. Oh, I've got SpaceX. So you're going to be very, very careful. We actually found a very legitimate source that actually owned, at the time, 14% of their venture fund, which is an interval fund, so you can buy it publicly. The version we buy has to be bought on our platform, which is an RIA version, Registered Investment Advisory version, and I believe it's on Schwab and a couple other platforms. But you have to buy it. It has the RIA, Registered Investment, the tickers for Registered Investment Advisors only. And we found it at the time. The SpaceX IPO was only valued at about the last valuation was $800 billion. So not shortly after, they bought Grok, which is Musk's AI company, for $250 billion. And then the combined entity was worth $1.25 trillion. But the numbers are just astronomical, what they're projecting. So we can get into the weeds on that.
So when you say a big story,
this is massive.
So put it in a context for people in layman's terms that may be listening right now.
All right. So the SpaceX targeting what they call a valuation. So that's basically what they're anticipating the listing to go for. So that's the listing. Okay, at about $1.75 trillion. It's looking to raise somewhere around $75 billion from the offering. And just to put this into perspective, Gary, the current record holder for the largest IPO ever is Saudi Aramco, which is the state oil company, right? Obviously owned by the Saudi royalty, the Saudi government. They raised about $29 billion back in 2019, and SpaceX would blow that away by a factor of 2.5. We're talking about a generational event in the capital markets, and in all sorts of host of issues that's going to cause, because it's going to come public at one of the largest companies in the world day one. And this is only the listing price. Yeah. We don't even know what that's going to be. We're talking the aftermarket price. Obviously, everyone's going to want a piece, and we're going to be in there pre-IPO. Through this fund, which is awesome. And I called all our clients on this, and some people, obviously for political reasons, didn't want it. And I'm like, okay, well, then there were plenty of other people that thought it was a great idea. So my 10-year-old son's got a little piece of it. Not a lot, but, a little bit.
He's a little guy.
Yeah, so he's only
enough.
10, so,
I mean, a lot of people know the SpaceX name. They watched recently the rocket launch and the splashback. But explain to them. I mean, when you buy SpaceX stock, what exactly are you actually buying here?
Well, that's a great question. SpaceX has two really big businesses, and one inside SpaceX. So there's the rocket launch business, and SpaceX absolutely dominates the commercial space for launching. They control roughly 60% of all orbital launches on the planet. They've launched more rockets last year than the rest of the world combined, and that's just a staggering number. Their Falcon 9 rocket is now also the most reliable launch vehicle built ever, and one specific booster has been reused 32 times. Imagine NASA using that same booster 32 times. It's the U.S. government, that doesn't really happen. So obviously there's a reason why SpaceX has a business with them. But the economics of the reusability are just flat out transformative and disruptive. It's absolutely huge.
And what about the second business?
All right. So the second business is their Starlink business.
Yeah.
And honestly, Gary, when analysts talk about the SpaceX IPO, they're really talking about Starlink. There's been rumors of a spinoff before the IPO. I don't know if that's exactly what Musk's strategy is. It's hard to predict. But this is their global satellite internet business. And SpaceX has approximately 9,000 satellites in what they call LEO, or low Earth orbit. Okay, those are low Earth orbit satellites.
Okay.
And that's 10 times larger than any competitor's constellation. The constellation is number of satellites up in the air. Okay. They also ended 2025 with over 9 million subscribers in 155 countries, and they've been roughly doubling their subscriber base every single year. So Starlink generated about $10.6 billion in revenue in 2025. And then with, I'll say this, EBITDA, So for those rookies out there, if you want to grab a pen and pencil, what does EBITDA mean? I don't mean to call you rookie. I'll call you newbie, whatever. If you don't know what EBITDA means, and please don't take that the wrong way, it's earnings before interest, taxes, depreciation, and amortization. Just a fancy smanchy term for earnings before interest, taxes, depreciation, and amortization. But those margins are roughly 50 to 54%, Gary, which is insane. Okay, that's just extremely profitable company. And those are like software company economics from a space company. And then projections for 2026 are calling between 16 and 24 billion for Starlink alone. So, I mean, that alone is a very valuable company, and it's all part of SpaceX.
Yeah, no, I agree. That does sound extraordinary. But what about XAI, the Grok artificial intelligence company? Because I understand that that's actually also part of SpaceX now, too, right?
Yes, so they merged. It was a $250 billion valuation, Gary, and you're totally right. In February this year, they completed the merger with XAI. Now, XAI, on the other hand, is burning through cash. Okay, it's just like every other AI company, and raising capital, but they're raising cash. But Musk has a grand plan for that, which I'm not going to question. So the entity is going to go public. Now, it will now include the rocket business, Starlink, and XAI, which develops the Grok AI model. Now, Musk's version is what he's called orbital computing. So here's what he's really looking to do, essentially, is he's using the vacuum and extreme temperature environment of space to run massive AI data centers. He wants to put data centers in space, Gary, because all he needs to do, he doesn't have to pay for energy, he doesn't have to pay for power plants.
Real estate neither.
Real estate, you don't need the zoning, and he can basically near zero energy costs for cooling in space, and potentially revolutionary for AI compute. Now, it's an audacious idea, but Musk has turned many audacious ideas into profitable reality before. Now, my whole take is, okay, what happens if a main server goes down? It's not like you can just call the IT guy. Someone's going to have to climb up into that satellite and fix it. So I don't know.
But I'm thinking to myself, Mark, SpaceX, that was founded back in 2002. That's 24 years ago. Most companies go public long before that. So why do companies then like SpaceX stay private for so long?
What's interesting, Gary, is everyone talks about, you have to talk about the grind that Musk went through to get to this point, all the failures and studying the failures and the trials and tribulations and the studying and the engineering is amazing. And, that was 2002, Gary. That's a long time ago.
That's my point.
24 years of that's overnight success, right? So try putting your life's work into anything for 24 years. Let's hope, you need to be successful. So people who are criticizing, oh, look at him. He's well, yeah, he is a billionaire. He's he's going to be the world's first trillionaire. But, here's somebody that actually put the work in, right? They put in the work. So stop complaining. And you want to get ahead, you got to put the work in. It's that simple. So that's so it's a pretty. But companies have been staying private for a long time, Gary. Back in the .com era, people were going public. Like Microsoft, even before the .com bubble, you could have gotten Microsoft probably as a small cap stock. It went public, I think, an $80 or $100 million valuation as a small investor. So the downside to the people staying public for that long or private for that long, and I'll explain why in a minute, is small investors can't get access to those type of investments because that's venture capital and institutions and everybody else. And they've been staying private for a lot longer because 20 years ago, like I just mentioned, companies would go public very, very early or relatively early, maybe after a year or two of revenue, and they'd use the public markets as a primary way to raise growth capital. But today, private equity, venture capital, sovereign wealth funds, they've accumulated enormous pools of money, and companies like SpaceX can raise hundreds of billions of dollars privately without ever going public. So that is exactly what's needed. Now, the reason they stay private, they can stay private indefinitely because, and then I'll anyway.
There's disadvantages of going public?
Well, yeah, there's plenty. As a public company, you're subject to quarterly earnings pressure. You have to disclose your strategy to competitors. You have activist investors who can create distractions. Regulation, Gary, Dodd-Frank and all those things, Sarbanes-Oxley, all those different regulations that's not meant that people forget to mention are a lot of reasons why the cost of compliance to go public is a barrier to entry for many companies. And that's why in 2018, Musk was trying to take Tesla private, and he had enormous freedom, though, to operate SpaceX as a private company without Wall Street second-guessing every little decision. Because, these guys are all analysts, and half of them have MBAs, but they've never really run anything, but yet they're nitpickers. They're nitpicking analysts, so they drive me crazy because what have you actually done and run?
Right,
But you can sit back and be a Monday morning quarterback,
But for the everyday investor, Mark, what does it mean for them?
Well, this is one of the most exciting period of a company's growth. The phase where this is where early investors make 20, 50, 100 times their money. And that happens in the private markets. But by the time a company like SpaceX goes public, a huge portion of the value creation's already occurred, as I mentioned earlier. So the venture capitalists, institutional investors who got in early are the ones who captured the bulk of the gains. The public investor at the IPO is often left buying at a much higher price. And valuation does matter here, Gary. So SpaceX is going to go public at roughly 90 to 108 times its trailing revenue, depending on which estimate you use, and that's an extraordinary multiple. And there's, legitimate analysts wanting the stock could struggle post-IPO. And historically, most mega IPOs have underperformed the market in the first year. Meta is actually one of the only mega IPOs, which was the former Facebook, in recent history to beat the market over the long term. But it even fell sharply after year one, because what happens is those shares, the lockup period, for the people who have been holding all those years, once that expires, they want to unload their stock. So
you mentioned, Mark, the IPO might be overpriced by some measure. So how do you and your clients at Financial Resources Group approach SpaceX right now?
Well, I would honestly say that I don't think this company is going to be overpriced at all. It's overpriced. I can tell you Google was overpriced. Dell Computer was overpriced. Every company I've seen grow to the sky, right? NVIDIA was overpriced at one point. Apple was overpriced. And Apple's been a value stock for a long time, but give me a break, I don't think it's overpriced at all. The analysts need something to hang their head at. So I have a feeling that this is a company that over a long term will grow to be a much larger company than it is today. Yeah. But we do gain access. So that's a great question, Gary. So we can really add value to our listeners today. So at Financial Resources Group, we've been giving qualified clients, and you don't have to be accredited to get into this fund. You just have to be able to own it for, I think it's liquid once every 3 months. We could trade it one time every 3 months on a certain day, which kind of makes it annoying. But why would you want to get out of it? We don't ask clients to put your liquid money in this. This is your risk money. But it's dozens of other private companies through our registered investment vehicle called the Private Shares Fund. The symbol we buy is PIIVX. And if you're listening to this, you can't go on Fidelity and buy it, because I've had plenty of people try. You can buy it through us or, another registered investment advisory firm, but then we're able to offer it, and we understand the fund, and we actually have a great relationship with Private Shares. I have a personal contact there who knows this fund inside and out, and sat on the phone for an hour with one of my clients going through all the details. So.
Let me do this really quick. Folks, you are listening to On the Mark along with Mark Pappa. I'm Gary Byron. Mark is the president and CEO of Financial Resources Group out of Glastonbury. You can find them online at frplan.com, and you can call. You can make an appointment with him, 860-657-8380. More towards the end of the show, he's got a special for you. He's doing something right now. Kind of cool. 860-657-8380. All right. No, tell me more about the fund. Like, for example, how does it work?
Okay. In simple terms, the Private Shares Fund, and it took a lot of work to get this done, especially simply because you're buying venture capital and something similar to what they call an interval fund. So it's registered under the Investment Company Act of 1940. So it has regulatory oversight just like a mutual fund, but it's able to invest exclusively in late-stage private companies. Now, a late-stage private company is a private company that's what they kind of refer to as unicorns. These are the large, big, venture-backed private companies that I'm going to share a couple names for also, because it's not just SpaceX in the fund. And here's the key thing. You don't need to be an accredited investor. You really only need, so you don't need that minimum. The minimum investment is $2,500 for the Class A shares, and accessible right through our other custodial platforms. So we don't buy the Class A. We buy the institutional version, because in this way you don't have to pay an upfront commission on it. We do charge a fee, though, but and then the fund is not free. But, again, to have what these people have put together, it's worth it. You're getting access to some of the best venture cap companies in the world, through a fund like this. It's much better. So the world's been democratized, Gary. The small investor does have an opportunity to get into some of these things. So our clients have had they'll have meaningful exposure to SpaceX growth before the IPO and at private market valuations, which I mentioned before when we first started buying the fund. I wish I knew about it sooner. We got in at $800 billion, so we think we're going to have a nice upside at some point.
Wow, that's pretty exciting. I mean, besides or maybe even beyond SpaceX, what else is in this fund? Because I understand that there are some other remarkable companies in there.
Yeah, and these are household names now, Gary, too. So what I love about the fund, it's not just a one-trick pony. It's a diversified portfolio. There's 78 late-stage private companies with the venture capital world calls unicorns, meaning private companies valued over $1 billion. So you've learned about EBITDA today. Now you're going to learn about unicorns. So it's a private company valued at over $1 billion. And let me walk you through some of the highlights. Databricks is another company. It's one of their top 10 holders, and they do data analytics, and it's an AI company that just completed a Series L. So they've been, they started Series A. So this has been raising money for quite a while. They're valued at about $134 billion, Gary, and they're still private. But they're one of the most important companies in the AI enterprise infrastructure and the build-out, and that's expected to go public eventually. Kraken, you might have heard of Kraken,
of course.
The cryptocurrency company. We've talked about crypto here on the show before. That's also a portfolio company, and they filed the confidential S-1 with the SEC last year. So they're on the IPO runway as well. And one other thing I want to add, Gary, is the IPO market, it's just been a big, giant drought for a long time. And now we think the market is ready. The market's ready to start seeing more and more companies come public, because it's been a long time, many decades before we've seen, active IPOs. So it's quite interesting. Discord's another one, the social platform for gamers. They're involved. Arctic Wolf is a leading cybersecurity company. One that's super exciting to me is Cerebras Systems, Cerebras. Mm-hmm. And they're building a specialized AI processors that compete with NVIDIA, and they're getting a lot of traction. And they compete in certain applications. They're a fascinating company. Axiom Space is another one. So there's just a lot of really cool companies. Ripple is another blockchain payments company. And then Betterment, we've heard the robo-advisor. So there's a lot of... Grub Market also is really cool. This is a digital food supply chain company, Gary. They work with local farmers so that, we see the farm stands, and this actually helps local farmers in the create a supply chain to deliver fresh to all the local grocery stores and actually get into so you're not just a big corporate farms. It gives those local farms a shot at competing.
Nice.
And offering specialized, farming products as well. So Grub Market, that's another one that I thought was really exciting. Data Miner was one, and then there's another equipment leasing company, which I'm familiar with. But just a lot of really cool companies that...
How about Lime? That scooter company, electric scooter company.
That's another one.
That's in it as well, isn't it?
Yeah, those are the ones that you see people driving on the city streets a lot. So.
Yeah. That's an impressive lineup, Mark. So when you put...
Yeah, and what these guys put together is unbelievable.
You mix SpaceX and all these companies together. What are you really building here for a client?
Well, this is a specialty product, Gary, so this is not something that goes in our model portfolio. This is for our clients with a risk appetite. This is for our clients who are in the know and then get it. It's not for your everyday mom and pop who walk into the bank and, buy a CD.
Right.
This is for those people who want something exciting, something different, something alternative. And we're always looking for ways to separate ourselves, Gary. But, when I saw how private shares were structured and their partners and the people who put, just to do the accounting and the valuation together. This is not something that they were even able to put together overnight. So they put in a lot of time, energy, spent a lot of money on lawyers and accountants to get this figured out, and consultants. So this is not something that was just built overnight. So what I felt was, after researching the company, doing our due diligence, speaking with the management, that this was an appropriate investment for our investors, and it wasn't one of these fly-by-night companies. I've seen scams where people right online, we can get you the SpaceX IPO. And then you call them up, and it's this guy with a real thick accent from L.A., And I called him up, and I'm like, well, how do I, what's your minimums? And, he's like, don't waste my time with less than 100,000, real jerk. And I said, you know what? I'm sorry, but I hung up on the guy. I said, there's no way that this guy is truly representing somebody that owns SpaceX. So what they'll do is they'll try and get people, a lot of times they don't even own the shares in their inventory. They try and source them, and they may not be able to offer them at the price they're saying. So there's a lot of illegitimate companies. If you want a legitimate source, guys, ladies and gentlemen, to gain access to these different companies, you'd want to give me a call. At the very least, if you have another alternative, and I know there are a few out there that I've researched, make sure that they're registered, that they're legitimate, they're not some private fund in the middle of nowhere, because you can easily get scammed. So the reason I'm offering this to folks also is to say, hey, we have this opportunity, but we've done the due diligence on this company, and they're a high quality group.
I got to wrap things up here in a moment. I know you got to do a disclaimer, but you want to go over you offered a special last couple of weeks that I know people are taking advantage of. Do you want to mention that as well?
Yeah, and let me talk about my disclaimer. Obviously, this is not an offer to buy or sell securities. That all investment comes with risk. Past performance is no indicative of the future. And please consult, a licensed professional before making any investment decisions that you might hear on the show. And frankly, what I'm telling you is the reason I'm bringing this up is A, I'm excited about it, but B, be careful out there. Don't believe everything you hear. Look at the documents. Look at the paperwork. There's also some caveats with this fund. It's not liquid every day. And there's a 5% of the fund's assets per quarter is potentially you can get locked up in this fund. So we've told that to our clients. Second, the valuation can be challenging. It's done by, the top world's accounting firm, but they know how to value these companies correctly. So that's another one. There's concentration risk. SpaceX is going to be 20% of this fund. It was 14% when we started. So, and fourth, their fee structure. The interval funds have higher expense ratios. So, the offer that I'm giving folks again, this is just is up to a $2,500 value for our full checklist, our Roth blueprint, and a true deep dive into your financials, your tax returns, your power of attorney, and really making sure that you're covering all your bases. There's 21 points, and it's a $2,100 value. If you listen to the show and mention it, mentioned that you heard me on the radio, then we'll bring you in and we'll take that. We'll take a deep dive into your finances to find hidden expenses, hidden fees. We'll make you more efficient, and we'll also give you maybe some additional opportunities that you're, access to things you're not getting at your larger firm or a regular, cookie cutter
Financial
portfolio.
Resources Group. They're out of Glastonbury, Connecticut. You can find them online at www.frplan.com and take him up on his offer. It's incredible. I've never heard anything like it. No one else is offering it. Call him right now, 860-657-8380. Again, 860-657-8380. For Mark Pappa, I'm Gary Byron. Thank you so much for listening to On the Mark. Until next Saturday morning, have a good one, everybody. So long.